Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 24th of June 2019, so welcome everyone. Welcome to this Monday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff, just to see how everything's shaping up. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just to quickly to remind you guys, I mean, last week we didn't have any either Traders Espresso nor Traders Tea Time videos, so now we're kind of back to normal, back to the same schedule. So yep, feel free to check us out, and also feel free to kind of sign up for the or should I say subscribe for on our YouTube channel here, and so that you wouldn't be missing any of the videos in the future. So but for now, let's jump into the charts. Now the first one I want to touch on here is gold. Now gold had a fantastic week last week, so looking at this one from the technical side, you can see it's trading nicely above this little short-term tentative upside line taken from the low of the 30th of May. So it traveled higher but failed to kind of push above this 1412 barrier. So now this is going to be an important one for us to watch. So it found resistance just slightly below that 1412 zone, and like I said, for now that's what we're going to be keeping a close eye on. In order for us, let's say, to aim for higher levels, ideally of course we would need to see a nice good pop above this 1412 level, and only then we will aim for higher levels like the 14.3385, something like that, and I'll show you what that level is. Certainly let's not exclude the possibility of this one seeing a bit of a correction here to the downside, but as you can see by the support level that I've drawn here, basically what we're looking here for is, let me just quickly adjust this one. There we go. So this is what we're looking here. In order to aim for, let's say, at least a test of this upside line, we would like to see gold falling back below the 1380 zone, approximately there. This way, like I said, the gold could travel to test this upside line, but as long as this line remains intact, we will remain positive in the near term and aim for higher levels. That said, if this upside line gets broken and if we see it drop below the 1358 level, marked by the high of the 14th of June, now this is where it could turn out to be a little bit ugly here for gold, and we could see this one sliding further down. But and further down, I mean, we could even aim for this little target near the 1332-33 zone, approximately there. Probably by the time, let's say, if we get this break here lower, by the time it would travel lower here, it might test the 200 EMA. So the 200 EMA might coincide with this 1333-32 zone. Of course, this is just an idea for now, guys. Of course, the downside is slightly off the table unless it's a small short-term correction. Keep an eye on today's pivot. Today's pivot is near the 1397 zone, 97 and a half, something like that. If we see a drop below this, then we could see this one sliding back down towards this area that I was talking about, the area near the 1380 zone. So Keep your eyes on that one. But if this gets a nice boost and pushes above the 1412, this is where, like I said, we could aim for slightly higher levels. Initially we will target the R2, today's R2, which is around the 14.28 area, approximately there, 28, 27, something like that. But a much better target here for us is around the 14.33, 34 area. And just to show you what that level was here in the past, let me just jump into a weekly chart. And basically this is going all the way back here to the levels seen in August, around August 2013. So you can see that how significant that level is. You can see that this is where the commodity got held and kind of reversed back to the downside. So that's why this 14.33, 34 level is going to be quite an important one for us to watch. But again, I'll repeat myself, only if we see a push above the 14.12 zone first. Keep your eyes on this one. Let's see how this is going to play out. DXY, so the dollar index. So you can see that we looked at this one a while ago, and basically what's happening here, probably need to adjust a few of the lines here. So basically now we are trading below this little tentative downside line taken from the high of the 23rd of May, approximately there. So this little downside line, you can see how extended, how kind of well extended to the downside is, and how kind of well distanced how the index has distanced itself from that downside line. But the most important thing is here is that the index managed to break this 96.45 level, and I talked about this level previously in my previous videos. Basically, if what I was saying, that if we do get a break here below this, then yep, further declines are possible. So as you can see, the index also managed to break this 96.21 level marked by the low of the 22nd of March, and now we're seeing a bit of a correction here, a small correction in the 4-hour candle. The only thing is that, well, I mean, we're still bearish overall on the dollar index. I mean, we could see this one correcting back to the upside, maybe even actually testing today's pivot, which was around the 96.30. And if that fails to withhold, or should I say that we fails to resist the resist here, then sorry, the other way around. If it fails to push above this, let's put it that way, then yep, we may see another leg of selling, which could bring this index towards the 95.90 level, or even below that. But for now, we are expecting maybe a small correction here to the upside, and let's see how this is going to play out near the pivot, today's pivot, which is around the 96.30 level. If this continues to push higher and suddenly, let's say, moves back above the 96.45 zone, well, this could kind of give a chance for maybe a larger correction to the upside. And the reason why I'm saying that this could be a larger correction, because we are still below this downside resistance line. So for now, guys, of course, the main levels to watch, of course, are today's pivot, which is around the 96.30. There is a small level here, which is around the 96.21, that marks the low of the 22nd of March. Keep a close eye on this one as well. If, let's say, like I said, if this gets broken, then yep, the good point here to watch would be this pivot. But if this pushes above the 96.45 level, back above the zone, then, well, I mean, the bulls could be back in the game, at least for a little bit here. If this decides to not to retrace higher and drops below last week's lows near the 96.10, well, then, I mean, keep your eyes on this little area near the 95.90. So this might play out nicely here. Could be a nice area of support, but for now, the only thing for us is left is to continue observing this one. As I said before, we may see a small correction here to the upside a little bit, just given the fact that on the shorter time frames the index is quite over oversold here, so that's why a bit of a correction to the upside could be possible. This leads us into euro dollar very quickly here. So this one is pushing nicely to the upside, so it managed to break this key area of resistance near the 1.1348, marked by the highs of or should I say the previous June highs. So last week we did have a nice break here, and the pair traveled higher and stayed above this level. So now the path is kind of holding towards the 113.90 level. Just to show you what that level was here in the past, so that was the near the highs of the 22nd of March to this year. So but just slightly above that we do have this nice downside resistance line, and just let me jump into a daily here just to show you what that line is. So it's roughly around here, guys. So this is a bit of a tentative one. So in a way you could draw it, you could bypass this little peak here seen on the 27th of March and just connect this one. So then of course this will show that we already have passed this this line. But if you connect these two, the peak of the 16th of February and of 2018 and the peak of the 27th of March, then you can see that we still have some room here for another push higher. Of course this kind of makes it a little bit further now. There are some good levels here above that before, but still keep your eyes on this one. Keep your eyes on some of these key resistance levels. For now the main one for us is going to be the 1390. If that gets a nice break, then the next target for us is going to be around the 14.48 zone, something like that, which is marked by the high of the 20th of March. So good potential targets. Also do not exclude the possibility of seeing a small correction here to the downside, given the fact that on the shorter time frame we are quite extended here to the upside. But that said, it never kind of stopped the if it wants to move into the, in one direction, it will continue moving in that one direction. But first, before we could aim for higher levels, we need to see that nice good pop above the 1.1390 level, and then we'll aim for the 1.1448. In terms of the downside here, if this suddenly drops back below the 1.1348, then yep, we will consider these slightly lower areas like the 113 zone itself, or even further down. Also, what you could do here is just to keep in mind is this little nice good upside support line. You can see that how well this has kind of distanced itself from that upside line. So in a way, if we see a drop below the 1.1348, it could increase the chances for euro dollar to slide back towards the 113 area, or even actually go back towards this upside line taken from the low of the 30th of May. So for now we're going to keep an eye on it, but of course this is, as you can see, it's already trying to push higher. Keep your eyes on this 1.1390. Let's see how this is going to play out. GBPUSD also is pushing higher nicely. So now I did have previously this area here highlighted, so this area near the 1.2750. So this is a very interesting point here, because as you can see that it did have its overshoots here, but kind of never closed the 4-hour candle above this 1.2750. So this is what we're looking here for. We need to see a nice good close above that 1.2750, at least of the 4-hour candle, before aiming for further higher areas. And by higher areas I mean the 1.2815 level. That could be a nice potential target here, given the, as you can see, it was a nice spike here back on the 21st of May this year. So initially we will target that. This level coincides today with the R2, and yep, this could eventually play out as a nice target, but again, I'll repeat myself, we need to see that nice good clear close, at least of the 4-hour candle above the 1.2750 level, and then we will aim for higher areas. If this decides to reverse back down and drops below the 200 EMA here on the 4-hour chart, then yep, it might test today's pivot, which is around the 1.2710, but if that fails to withhold, another potential good support area could be seen near the 1.2640, marked by the low of the 21st of June. So this was the Friday Friday's low basically, and we could see a retest of that one. But again, I'll repeat myself, we need to see a drop back below the initially, of course, below the 1.2750, and then a drop below the 200 EMA. And the last pair for this session I want to quickly touch on, and that's USDCHF. So initially this one did, of course, let's start from the beginning, that last week we did saw a strong sell-off here, breaking, which led to a break below the 0.9850 level. So this is quite an important zone here, previously acting as a very good area of support, also resistance here and back in January, at one point in January this year. So in a way, what we're going to do here is we will aim for higher levels only if we see a push back above this 0.9850 level. For now, this is not looking good for USDCHF. In a way, it could travel lower. It is currently sitting below the pivot, which is around the 0.9785 zone. In a way, we could aim for that one. Let me just clear some of these here. But what you could in a way play the safe game here, guys, and just wait for a drop below last week's low near the 0.9750 level here, not far from there. You could in a way wait for a drop below this level here, and then aim for lower levels, because like I said, it is a bit of a tricky one here. In a way, it could travel at this point in time. I mean, it could continue with the downside, or actually, because given that it's already quite oversold here in the shorter time frames, it might travel a little bit higher. But again, like I said, let's play the safe game. Let's wait for those confirmation breaks. Initially, like I said, we will aim for the 0.9750 level. If we see a drop below this, then yep, we could see further declines, going towards the 0.9710 or even a little bit lower. But if this makes a push higher, again, we will be very careful and cautious here. For those who are more on the riskier side, I mean, you could start looking at this area here near the 0.9789, but to be honest, I mean, this is the point, this is the area where it could still reverse back down and drop lower. So that's why we do have this 0.9850 level as our point here for the upside, where we're gonna consider the upside again. Okay, guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. As I said before in the beginning of my video, please subscribe to our JFD Bank YouTube channel, so that you wouldn't miss any of our videos that we do here, in different languages, of course. So yep, and I hope you can find them useful, and hopefully, you know, you can squeeze something out of them. Okay, guys, I hope you have a wonderful trading day, and I'll see you later. Bye bye.